What's up, everybody? Mr. Zero to Infinity says hello for episode 65. In this episode, I'll go over my bull thesis on why I just bought a new microcap stock with growth potential for my Zero to Infinity stock portfolio. So let's get straight into it. The new stock I just started to buy is called FitLife Brands. FitLife Brands sells nutritional and wellness products for health-conscious consumers through GNC stores and online platforms such as Amazon. Today, the company sells 13 brands, with the most recognizable brand, in my opinion, being MusclePharm. FitLife Brands just acquired MusclePharm for $18.5 million, and because of this acquisition is one of the many reasons why I bought FitLife Brands stock. Let's go over a breakdown of my bull thesis for FitLife Brands stock. Before I get started, this isn't financial advice, and you should never rely on this video when making investment decisions. FitLife Brands bull thesis. Number 1, CEO Dayton Judd has skin in the game. First and foremost, who's the CEO? Dayton Judd has served as a director of the company since June of 2017, is currently the chairman of the company's board of directors, and began serving as the company's chief executive officer on February 18, 2018. Mr. Judd is the founder and managing partner of Sudbury Capital Management. Prior to founding Sudbury, Mr. Judd worked from 2007 through 2011 as a portfolio manager at Q Investments, a multi-billion-dollar hedge fund in Fort Worth, Texas. Dayton Judd has skin in the game, owning over 58% of the shares outstanding. Since FitLife Brands recently uplisted on the Nasdaq on September 18, 2023, let's review a short video of Dayton Judd on the day the stock was uplisted.
Nasdaq is delighted to be your partner, and we look forward in supporting FitLife Brands as you continue to grow as a Nasdaq-listed company. And now, please join me in welcoming your chairman and CEO, Dayton Judd, for further remarks. Dayton?
Thank you. It's a tremendous honor to stand here today and represent FitLife on this historic occasion. We've had quite a journey over the last few years. You all know that I like numbers, so allow me to summarize our journey with some data points. When we started this journey in early 2018, we owned 7 brands. Today, we own 13 brands, including some very well-known brands. When we started this journey, our annual revenue was less than $18 million and declining. We were losing a lot of money. Today, including the effect of recent acquisitions, we are well on our way to $75 million plus of annual revenue and are highly profitable as a company. When we started this journey, our stock price was 70 cents a share. Last time I looked earlier today, we were comfortably above $21 a share, an increase of approximately 3,000% over just a few years. Said another way, $1 invested in FitLife at the beginning of our journey is worth more than $30 today. But far more important than the numbers are the people behind the numbers. None of this would have been possible without each and every member of the FitLife family. Thank you for your commitment to the company and to our customers. Thank you for the incredible culture that we have within our company. We use the word family a lot because that is a good way to describe what we have. So this is an exciting day for our company. Personally, I am honored to be a part of the FitLife family. I'm incredibly proud of what we have accomplished over the last few years, but more importantly, I'm excited about the future of FitLife and about what we as a team can do moving forward. So to every member of the FitLife family, thank you all for your efforts. None of this would have been possible without each of you. I'm grateful for each of you, and I'm honored to work side by side with you as we continue to grow this business. Thank you.
In my opinion, over the last couple of years running FitLife Brands, Dayton Judd has demonstrated he knows what he's doing. He has turned around the company since taking the CEO position, and he's on course to continue to grow the company's top line and bottom line as the years tick forward. Number 2, MusclePharm's acquisition upside potential by fully internalizing the online revenue stream. FitLife Brands just acquired MusclePharm Corporation. It's been stated that MusclePharm was generating approximately $1.2 to $1.5 million in monthly revenue at gross margins between 25 to 30% during bankruptcy. It's been stated that FitLife intends to return the brand to growth and enhance profitability through a focus on online sales direct to the end consumer and expand wholesale distribution. FitLife intends to work with MusclePharm's previous retail partners to restore distribution in the domestic wholesale channel. I believe MusclePharm was an amazing acquisition since the company has displayed it can make money and is a recognizable supplement brand. Back in Q1 of 2022, when MusclePharm was a publicly traded company, MusclePharm generated $13.1 million in quarterly revenues at a gross margin of 11.5%. Talking about upside potential, MusclePharm actually hit a high point in 2015, reporting annual revenues of $166 million, but the company lost more than $51 million that year too. There's a large customer base that already loves or once loved MusclePharm's products. It's been stated that FitLife's goal is to deplete third-party online sales in Q4 of 2023 and early 2024. After third-party resellers have exhausted their inventory, FitLife intends to fully internalize this revenue stream and drive further online revenue growth for the MusclePharm products. As is the case with FitLife's other brands, online sales of MusclePharm products are anticipated to generate substantially higher gross margins than those achieved through wholesale distribution. If you're enjoying this episode so far, make sure to click that like button, greatly appreciated. On to number 3, minimal share dilution. Since CEO Dayton Judd has a large percentage of shares outstanding, he has focused on minimal share dilution in the past. There's always a possibility of raising cash through a private placement, but I think the company is in good shape to keep share dilution at a minimum, which is great news for long-term investors. FitLife also may purchase $5 million of company stock under the 2023 share repurchase program. This is good news in the event the share price drops considerably. Last time shares were bought was back in Q4 of 2022 at approximately $15.86 per share. On to number 4, debt reduction with cash flow. Dayton Judd has said after closing the MusclePharm transaction, FitLife expects to focus on integrating and growing its recently acquired brands and reducing leverage through EBITDA growth and debt reduction. In my opinion, debt reduction should be the focus, especially since the debt is financed at an 8.2 interest rate. I think it's better to keep future acquisitions on hold, especially since the cash position has been depleted after the MusclePharm acquisition. A key metric I'll be focusing on are the net income numbers for 2024. I'd like to see a steady increase as the year ticks forward. Number 5, supplements are consumed on a regular basis like a subscription. There are a ton of supplement brands out there. The big benefit is to keep customers coming back for their monthly or bi-monthly supplement orders. Gaining brand loyalty is key. It should be FitLife's goal to increase the subscribe and save customers on Amazon for all brands, especially MusclePharm. Number 6, MusclePharm's distribution upside. Prior to bankruptcy, MusclePharm's products enjoyed strong distribution with major domestic retailers, including Costco, Walmart, GNC, Vitamin Shop, and the list goes on. Distribution through most of these retail partners was adversely impacted by MusclePharm's financial distress and ultimately bankruptcy filing. FitLife intends to work with MusclePharm's previous retail partners to restore distribution of the company's products in the domestic wholesale channel. I'll be following any big retailer announcements very closely. On to number 7, MusclePharm's international expansion. MusclePharm has a strong international following, and international sales have been a substantial portion of the company's revenue during bankruptcy. FitLife intends to strengthen relationships with existing international wholesale partners and expand international distribution with new international wholesale partners. Last but not least, number 8, grow earnings per share. To accomplish earnings expansion, FitLife will need to keep the employee headcount as flat as possible and grow those sales numbers. FitLife had 27 and 25 full-time employees as of December 31st, 2022 and 2021 respectively. I expect the employee count to go up with the new MusclePharm acquisition, but the goal should be to limit the expenses, aka employee salaries, as revenues grow. Expand those profit margins. It's not always about how much you make, but how much net income you profit, resulting in higher earnings per share. There are great benefits when you're a profitable company like FitLife Brands. So there you have it, my bold thesis on a few reasons why I bought FitLife Brands stock, which in my opinion is a microcap stock with growth potential. Based on my initial purchase of $22 per share, the company is valued around $100 million, give or take. So it's definitely a microcap stock. Since it's a small stock, there's a big spread between the ask and the bid price due to the low trading volume. My goal is to increase my position if the stock sells off over the next couple of months. Let's end it there. Play the music. If you made it this far into the episode, then make sure to subscribe and click that like button to support the channel. It helps immensely with the YouTube algorithm. Feel free to watch my earlier episodes of how I'm growing one of my stock portfolios from zero to infinity. One of my favorite comments from last episode is on your screen. All my episodes are meant to be watched in order since the stock market is always changing and there are always new trends to be found as the weeks tick forward. If you have a question that you'd like me to feature in a future episode, feel free to email Mr.0toinfinityquestions@gmail.com or hit me up on Instagram, Mr.0toinfinity. Thanks again for watching. Let's keep building from zero to infinity. You got this. As always, do your own research prior to making any investments. Read the disclaimer on your screen fully. Remember that all my episodes are for informational purposes only. I am not a financial advisor, and anything discussed on this YouTube channel should not be viewed as investment advice. I am only sharing my personal ideas, opinions, and one of my stock portfolios. You should never take any of this information as guidance for buying or selling any type of investment or security. There are financial risks associated with investing.